Hello, everyone. Welcome to another live trading session. Today is April 24th, Wednesday, and we're going to take a look at the market, see what we can do today. It's been a little while since our last trading day, as our metrics were a little bit out of line, but everything is fine, and we're kind of back to, within the our guidelines, and we should be able to put on another trade, but we'll take a look at that as well as some other things. Let me start here by introducing the new combined UOTS tab in the spreadsheet, because if you know, we used to have we still have it, but for a little while we'll have both of them, but then we'll switch over to the unified one. So naked puts we tracked separately here, and then put debit spreads, but it's a little bit more intuitive and easier to see where we at when we have them both here, like naked puts right here, then put debit spreads on the right hand side. Then we can add different metrics to the right hand side here. And I started with just tracking the premium capture rate, and I'll go more into detail about that specifically, maybe in a different video, but just so you know what it is here. I'm tracking the individual trades PCR, then account PCR, and I'm only counting the ones that actually have naked puts closed. And so we have few more trades going on, and basically we put a trade at the same time. We put naked puts, and then we put the put debit spread. We recorded, we manage them still separately, but the metrics are on the same line, and they'll have the same trade ID, so you can kind of match what you opened at what time. And I think it's going to be really good. We'll be able to add more metrics to this. But let's take a look at our account and see, and just see where we're at, and then we'll go from there. So let's first put this in, and VIX is 1621. So a little bit down from a couple of days ago. Our delta is 120. Now keep in mind, this is with the one zebra, which is a negative delta trade, so it would be around 165 otherwise, but that's what we have right now, and I think we'll keep that trade for a little while. And let's take a look at the theta. Theta is at 109. We don't really care what the theta is, but we still record it just to have an overview of what's going on. And then the buying power, we take a look at here, refresh it, and 32.4, 32.4, and our net lick, let's take a look here real quick. 66,468, 66,468, 66,468, and all right, so we gained a little bit of ground back. Let's remove these are extra tabs here if somebody wants to keep hedges separate from the metrics for hedges separate from the regular trades, so they would be automatically taken out if you use this. But let's just hide it here, so it's not, where is it? Hide columns, yeah, right there. Okay, so we are at 0.18 with our delta, which is fine. And even if we remove the hedge, we would still be at around 0.25 or something. So we would still be okay to put on another trade. Our buying power is also good for putting on another trade. So we'll do that. Let's refresh our memory here. We're looking for weekly target. Let's see, 66. We lowered this down. I'm playing with a CAGR. It's going to be around 20, but right now I'm trying 18 and 3 here. Gives us a total of 21. And that is asking us for a weekly premium of around 1,000. So we're going to go and target around 500. We'll see how many naked puts we'll need for that. And with the VIX in a 16 area, we're looking at around 11 delta. So let's go right here. Let's trade and table. So we have these two options, 86 and 114. Now, if VIX was much lower, like 13, 14 or something, we would consider 114. But right now with the 1625, I think we can go to this one right here. Or at least let's see what it pays us, and then we'll go from there. So delta 11 is giving us 135. So if we do, say, 4 of them, that sounds pretty good. I think that's good, 540 roughly. So let's see if we go ahead. Now, I know the market is going down, and yeah, if you take a look here, people will start to, calculate, oh, it's going to go down further. Yeah, it might. Yeah, I mean, that's part of the deal. I have no idea whether it's going to go up or down. Right now, it's down on the day, and it might continue to go down, but I'm not going to let that, influence me too much. I'm going to put on the trade, and we'll go from there. So let's see if we can collect the full amount, which it sounds like we might not. Let's see, activity. So we're gonna go replace this and just go like that. And all right, so we're filled at 2675, and that is, let's see right here. So 2675 times 5 and then times 4, it's 535. So we collected 535, and if you remember, if we go times 0.2 will give us 107, which means we're looking to do a spread of 100, and we don't want to spend any more than 107. But as a matter of fact, we want to spend a little bit less, and this is one of the things that I kind of realized that I should pay attention to a little bit more when I ran these numbers here. And I noticed that once I account for all of the commissions and fees, my PCR is a little bit under what I would like to be. I would like to be at 40, around 40 on a successful trade, when we don't stop out for a loss and the PDS expires worthless. Remember, we're keeping 60 from the naked puts, and once we paid up to 20% for the PDS, that leaves us 40. But with the fees and whatnot, we kind of inch down from there. So we'll try and just be a little bit conservative and look for a 100 wide that we pay a little bit under $100 for it. So let's see what we can get, and we'll also go 65 would be fine, but I would prefer a little bit more, maybe 70, 75. So let's see if we can get our pricing here, and if not, we can go to 65 and get a little bit closer to the money. So let's start somewhere right here and see what we can get now. We already have a trade here, so maybe let's see if we could sell another one, but it just gets a little bit harder to keep track, but we could do it. And actually we'll probably have to, because if we go up here, we start spending more than 100. So let's see. And this would be nice if we can close this. Let me see, somebody has a comment. Could you repeat how you obtained the 100 points wide? Martin is asking. Martin, I just take 20% of whatever money I collected on the put debit spreads, and you can see that right here, 2675, and I did 4 contracts. So times 4 and then times 5 for the multiplier will give you $535. And then if I take 20% of that, this is how I arrived at 107, and that means that's about 20% in value, and then also that will cover approximately the what you call it, the premium received, right? Because if I have 100 wide, it'll be worth $500, and that's what I want to have roughly. It doesn't have to be exact, and it can be a little bit less, a little bit more. But this would not be bad at all. But I could also go, let me just see what we get on 65 days. Let's just see what we get here if we go a little bit higher. Let's see. So not that's too much, and we don't want to do this one because we already have one short, but we could definitely do this one. but the cost is about the same as we had there. So let's go back. See, we can go. Let's see what we had. We had this one and this one. 97. Well, let's see if we can close it for that. We might have to pay up a little bit, but let's see. It looks like we will. And activity, and that's the one right here. Replace. We go a little bit up. Would still be okay. All right, perfect. So we got that. We're gonna open it here. We're gonna go to this new spreadsheet, and let me just start right here. So we go 60. Now I make it a little bit more automated, like the date and the trade will transfer automatically here. So we don't have to type twice the trade ID. We're just gonna add naked puts or NP in front of 60 for the put. I'm sorry, for the naked puts in here in the platform when we mark them down, and then we're gonna add PDS 60 here, and then it's also MES, but that's not always the case, so that's why I'm not copying it here. And here it is MES, and so this is new 1632. What I'm doing here is and we did what was the delta? Let's just take a look at that real quick. So 86, we opened 29. And the reason I'm doing this, and I'm going to continue further down, is so we have a record. We can always look back and say, look, when we were opening this at, VIX at 16 and delta at 29, over time we can see some patterns, and maybe we can decide to adjust our strategy somewhere, but you can't do that unless you have data. So I'm going to start collecting it here, and we'll go from there. So let's take a look here. So 4,600 and 2675. So 4,600, and it was 86 days, and 2675. We did 4 of those, and we're not going to touch this. This is for closing, so we got this right. And then we did 4950, 4850. So 4950, 4850, and we did it also in 86 days. And let's just move over a little bit, and we paid 1950. So minus 1950. We did one of them, and you can see here, this is from the roll. I rolled just the long one of the put debit spread a couple of days ago, well, last week, and I collected 1525. And now in this new tab, new spreadsheet, you can keep track of that, how many rolls you had, so that the commissions can properly account for the extra rolls, and then that's transferred here. So it's showing less loss than otherwise, because we collected a little bit. We paid 27 originally, but we collected 1525. If the market goes down, we'll either roll, because we still have another 100 left. It was 125 originally, now it's 100 wide. And as you can see here, we paid 97. So that's what we wanted. That leaves us with an extra $10 for commissions, and still stay in our 20% of the premium received. So that's good. I'm gonna later on just go ahead and fill up the naked puts and PDS, so we have them recorded in both spreadsheets for now. But later on I'll be switching just to this new one. I hope you like it. I think it's pretty good. What else I wanted to cover? I wanted to show here real quick the trades, the positions. I have a bunch of put debit spreads still alive, still bringing in some negative delta. And then we have one, I wanted to compare something. I wanted to see if I had this zebra here today, and it's down $153 from the day I opened it. And the break-even point is where the short is at. That's at 50.75. So if I went to just go, let me just try something. If I go here to close the position, just to open full. So I just wanted to come to this expiration, and if I go and short this one instead of doing the zebra, right now I would be let me see, 50.75. I would be losing so 75 to 85, so 10, that would be what, $50. So at the moment it looks like I would have been better off with just shorting the future. And so this is what I'm trying to figure out, when to do a short future, when to do zebra, because the premise is the same. They're giving you negative delta. This one gives you around 45 negative, and straight future would give you negative 50. But they have different payoff or different loss to the upside. But yeah, it's good to know. We would be better off right now, but if the market continues to go up, at some point it would make more sense to have zebra because of the limited loss to the upside. But okay, any questions, guys? Anybody? How is everyone doing? No, I'm gonna assume everybody is doing fine. All right. Well, let's. Who is that? Surab,
I personally, on
you're breaking up a little bit. Martin says Sweet Bobby shorted the future. Yeah, you can do. It's the same. It's similar. Shorting the future will give you straight 50 negative deltas, and doing the zebra will give you around 45. Now, zebra is good if the VIX is low and it increases, because the zebra will benefit from that. But then if you put it on when the volatility is high and then the VIX goes down, then it will start losing money. But there's place for both of them. Nothing wrong with shorting the future, but just have to be careful. If the market rips back up, you're gonna start losing money real quick. And I'm sorry, Surab, did I cut you off?
no, you're good. I think my mic was like my mic was not. It was speaking different mic. Can you hear me?
Okay, yeah, we can hear you now.
Yeah. So, uh, yeah, I personally, in the morning. Morning rally. I still took some of my position off, so I reevaluating everything. So I'm still on the pause mode for the new trade. Yeah. So just watching carefully for now.
Yeah, good, good. Just watch your metrics. That's what we want to make sure that,
Yeah.
like, that's the easy guidance, because if you watch your metrics, then it doesn't matter. Now this one, I have to work on this, because this trade sheet, this main tab takes info from naked puts and PDSs, so it hasn't updated yet with my new trade, which is in this one. So it'll look a little bit different. It'll give me a different date here, but that's besides the point. What you want to do is make sure that your delta is in line with your risk tolerance and everything, and then the buying power is in line. And then if it's out, you don't put on a new trade, and you just manage what you have until the conditions improve. But yeah, that's good. Just keep an eye on the market, and if needed, add a negative delta trade. That's how I actually managed to collect a little bit of money and soften the blow of one stop out. I think I showed that in the Discord, but if you go to naked puts here, I had to
Mhm.
stop out on this one, and that was it, right around 200. So I was down 1600 on that one. But at the same time, before I reached that point, I opened a zebra because my deltas were pretty high. I opened this zebra that, as the market was going down, this one was gaining in profits. So at the same time, when I closed that one for stop out, I also closed this one to make sure I lock in some profits. So that made the loss much more bearable. And that's something you can do. So now I still have this one going on, one right here. I had one more, but I closed it for a little bit of a loss on the market rally this week to make sure I don't have too many of them, because I don't want to be losing money on the way up, or at least not too much. So yeah, that's it.
Yeah. So
Now,
what
go-
when I was closing my shorts, my naked put, I mean, I have closed few on like even 30%, even 25%, right? And but then I took off some PDSs as well. It was not like nowhere near the 80% that we wanna take
Mhm.
in, but I thought, yeah, just since I was taking a risk off much sooner, I kind of took some profit from the PDS as well. So yeah, just
Right,
watching there
and
right now.
that's good. And there is not.
Regarding
Go ahead.
Zebra, so you said I have only done Zebra a couple times. So yeah, I think I understand the theory. It's attractive in a sense. It doesn't lose. There's not a whole lot theta decay, right? Um, uh, but I
Yeah,
think right now you are still experimenting, right? When to take it off? Like I think there's like when the market starts to rally, maybe it's probably uh,
yeah.
good to just
I
start taking it off.
Yeah, I don't have definitive guideline, sort of like mechanical guideline, but I definitely don't want to stay on too long. So what I'm mainly
Mhm.
doing, I'm watching my portfolio deltas. So let's say I'm at zero point 0.4 of my net lick, and I put one on. So if the market starts going up, and my deltas come down to 0.3 or 0.25, that means I no longer need that zebra, and I can take it off. So hopefully I don't take it off for too much loss. And this is what I did right here. So because I had two of them and the market rallied, I decided to take one off for a small loss before it becomes a larger one. But I decided to keep one on because it was still in a little bit of profit at that time, and I wanted to make sure I have something with a negative delta going on, which is good for now, because today that one is making a little bit of money, and it might help if we continue to go further down like we are right now. Like we were 0.4 when we started the video, now we're 0.47. So this one is probably not making, but like lowering the loss. It was 160 or something earlier, now it's 140. So if we continue to go down, it'll turn to profit at some point. But there's nothing wrong with, like you said, you were closing some PDSs for profit, and not at 80%. I think it's perfectly fine to start closing or rolling down the long, maybe for even 60. Maybe do the first one. Let's say you have 100 wide right here. So maybe you roll the first 25 for 60% of profit instead of 80, just to lock in some premium while still leaving the 75 on, and you can lock in that later on if the market continues to go down. So that's an option that I think I'll be looking into more. All right.
Yeah, the
Eh,
other option, like I think discussed in the Discord as well, was I did open a credit spread, right? Call credit spread. The
mhm.
idea was that it continues to rally, and if it's under pressure, it is still maybe okay because it's a spread, it's a vertical spread, not naked call, and the all the naked put should make a money. So even if I have to take a loss on that, that's fine. But I used like some percentage of that, like 35% of that to buy a haze because I was kind of worried the haze may not be sufficient. Right now, seems to be okay. The credit spread is in a small loss, but there's plenty of time to go. So maybe until it's really rallies rapidly, it should be okay. And although the haze will lose money, but it's kind of just to when things go bad, or when you are really worried. I think that's one of the options.
Eh,
Especially if you have lot of naked puts and they're under pressure, maybe uh, to buy a hedge that could be an option. Just do a credit spread right on the call side and
Yeah,
use
well,
that to do some hedge. If
Yeah.
it rallies, yeah, I think you'll be under pressure, but your naked put should rescue you again.
Yeah, it's hard to you have to balance it. You just don't want to overexpose yourself to the upside because you
Yeah,
don't want to
that's
be
true.
really losing a lot on both sides. Then you get whipsawed, and that's not good. So a little bit
Yeah,
of a
and that
limited.
actually happened. Yeah, that happened to me in late last year, right? Because after
Hmm.
October, I was still short and I couldn't get out on time, and so I had to take some loss on the call side.
Yeah.
So yeah, that's why I'm strictly doing spray like vertical sprays and small percentage only, right? You
Right.
don't really want to do some amount of, yeah, yeah,
Small enough to where even if you lose that money, that means you made all the money on naked puts, and then you lost a
yeah,
little bit of on the upside. That's fine. That's fine too.
mhm,
So we have to trade what market gives us and just move around, monitor our deltas, not to get out of line, and that's it. We will be fine. All right, guys. Have a fantastic rest of the day. I'll see you soon in the next live trading video.